Hey everyone, this is Hunter Satterfield, a partner here at Kane Waters and a member of the investment committee. And I'm here with your October market update. As always, I'm joined by Brad Sanders, the managing director of Tectonic Advisors, and Brian Bortz, one of my fellow partners here at Kane Waters and also the head of our investment committee. So for the month of October, our returns in domestic stocks via the S&P 500 were down right around 2.7%. Global stocks were down right around 2.1%. Domestic bonds were flat, maybe down a little bit at 0.5%, and then global bonds were flat, up maybe just 1.1%. So Brad, as always, thanks for joining me. And I kind of want to start with you. So we saw in 2017, and we talked about this at the time, in 2017, we saw sort of this slow and steady move up in the markets, just 0.5% or 1% per day. And we talked at the time that was actually pretty abnormal to see that movement. A lot of times there's more volatility. And now here we are coming off of, a month in August and a month in September where we had, down and up months. And then again here in October with down months as well. Can you talk a little bit? Obviously, we've got a lot of abnormal things in the market, but I think a lot of this volatility is not necessarily abnormal in a historic sense. Can you talk a little bit about what's causing that volatility this year or the last few months?
Yeah, I think it boils down to uncertainty. The market hates uncertainty. Brian said it on one of these videos before. I've heard you say it. And we just have too much of that in the economy and in the marketplace. We have COVID cases rising now. We had a really horrible day, I believe 2 days ago, where we had 100,000 new cases. So we're kind of regressing instead of progressing as far as the cases go. And then we have the election today. That's a big uncertain outcome that the markets are trying to price in. And human beings are funny. We kind of get reconditioned very quickly. We want everything fast, and we want to have our news quickly, and we kind of tend to forget things. But this market's more normal than it is abnormal. When you look at volatility historically, this is kind of more like what it's been over the past, call it 3 decades. 2017 was the abnormal year where you just, like, as you just mentioned, where it just melts up and there's no volatility. And unfortunately, as us being emotional beings, that kind of trips all our wires in our brain, and we start to think that the markets are easy. They're just not. This is actually kind of more like what a market's supposed to be. It's just crazy times with a global pandemic and an election happening today. I texted you earlier. Today, as we're taping this, the markets, the international markets are up huge, over 2%. Our markets are up over 1.5% here. If the market could breathe, this would be the equivalent of a sigh of relief, right? That's what we're seeing, and it has nothing to do with the election outcome. We don't know what that is. It's just we're taking that uncertainty off the table one way or the other tonight, and that's what the market needs.
Yeah, that's a good way to sort of frame like what it feels like for the market, today, knowing that, hey, we are going to actually have some certainty coming here shortly. And Brian, I kind of want to come over to you now and talk about, what are some of the things? Obviously, it's impossible to speculate about what's going to calm the market down, but historically, what are some of the things that show that it can sort of help reduce this volatility that we're seeing?
Yeah, thanks, Hunter. There's an old cliche in the markets, and cliches become cliche because they're partially true, that the market's run by fear and greed. And Brad was just talking about some of the fear. There's a lot of fear between virus issues, corporate earnings, election uncertainty, inflationary concerns. All of those things drive the fear. But then you start to see the greed come in when everybody is thinking about possible additional stimulus. And so the market will bid itself up too. So I think we're going to see both of those things happen in the short term. You're going to see the fear of the unknown and the greed of the resolution of the unknown, as Brad mentioned, the sigh of relief. And you couple those two things together in a very short period of time, and you're going to see some market fluctuations that happen short term. I think the message that I want our clients to understand is not only are we aware of this and that this is normal, also this too shall pass. And, we're going to look up here in a couple of quarters and we're going to be in a different phase of the market, a different phase of the economy. So let's don't make long-term decisions on short-term information. That'd be probably my best piece of advice for right now.
Yeah, and in the short term, obviously, as Brad mentioned, we do have an election today, and so when we're in front of you again with our update for November, we should have a president, and we should have some interesting information to report on kind of how the market has responded to that president. So in the meantime, we'll continue watching things behind the scenes for you, and we'll be back in front of you here in about a month or so. Thank you so much.